It's Professor Mike, and we're going to talk about other assurance services. I'm going to go pretty fast on this because I just want to build awareness for you, not go deep in these topics, but give you an idea of other things that CPAs, auditors do provide. So you remember when we went through reporting, there's a level of assurance that audits provide that some of the other services don't provide. When you look at the amount of evidence accumulated, in an audit, obviously it's the most extensive because you're forming an opinion and you're actively providing an opinion on the fairness of the financial statements in all material respects. Whereas in a review, remember, you are simply providing limited assurance, which is nothing came to our attention. But you are still doing procedures. You are doing analytical reviews, and then if something comes up in the analytical review, then you have an obligation to follow up and gather additional evidence on it. But it's not providing assurance that the financial statements are free from material misstatement. And a lot of it is inquiries and analytical review as opposed to doing tested details, tested controls. And then obviously compilation or preparation is simply that. It's just assembling the financial statements, not providing any assurance on them. So there's obviously statements for accounting and review services. These are issued by the AICPA. Obviously, no public company can avail themselves of these, so this is going to be a completely private company thing, except in situations where you might be compiling financial information for a foreign entity for a non-client. What a review consists of is inquiries of management and analytical procedures. Again, very, very limited process. A compilation is just helping management assemble the financial statements and maybe providing notes to the financial statements, the appropriate disclosures that would be required under GAAP. This might be a situation where somebody's preparing to get audits or doing IPO preparation or things like that, where they're not ready for an audit, but they want to get in the practice of creating notes to financial statements and things like that. So you might do a compilation for them. And then obviously preparation is no reports, no independence, nothing like that. So that could also be an IPO kind of preparation thing before they go through an audit. Here's the review report. We've seen this in our earlier chapters. And then compilation report. Obviously, they chose a very good name of the company. And then, compilation that's really just the financial statements, but doesn't have the GAAP footnotes that would be required. And then if you're required to issue a report on interim financial statements, which, again, when you've got a certain amount of size, you are required to issue those type of reports. You do limited reviews. And when we were talking with Brian, he was talking about the reviews of financial statements. This is where auditors get some leverage out of the procedures they do during the year. So at every quarter, before an earnings release, before a 10Q, the auditors will come in and they will do review procedures, and they may do some of their audit work for year end, but they're not expressing an audit opinion. They are simply doing a review because they are required to ensure that any financial statement information for interim periods is reviewed, because that ultimately becomes part of the company's annual reports and disclosures. As I said, the quarterly financial statements must be reviewed by the external auditor prior to the filing of the 10Q. So the goal is for a company, if you watch anybody's earnings releases, they try to do their earnings release and then file their 10Q almost immediately after. Why? Because they don't want a period of time to elapse where where things that weren't discussed in the earnings release and the conference call with the analysts arise when they file their 10Q, and therefore they've got to also make a disclosure or press release because this goes to securities law in terms of publicly available information. So, again, obviously, the review engagements for a 10Q, if you're their auditor, you're going to know the industry. You better know the industry. You know the client, you perform analytical procedures, and you get a rep letter again. So, this stuff is, pretty basic, but in my experience, reviews tend to be pretty thorough. They may take several days to a week, depending on the client and the complexity. So that helps the audit team, and it helps the client be prepared for the audit, because you can deal with accounting issues each time, and then also you're meeting with the audit committee every time. So this is relationship forming as well. So for attestation engagements, this is about providing a letter about a certain subject matter against stated criteria. Most common one is agreed upon procedures, and again, there's AICPA statements again for attestation engagements. So obviously you have to have you have to have a certain amount of professional capability to do this. Obviously, at the you got to comply with ethical standards and skepticism. And all of these can be examinations, reviews, or agreed upon procedures. So an examination obviously is the highest and most assurance. And its general distribution. Agreed upon procedures, it usually happens in a merger and acquisition situation. So when I was doing auditing, a major Japanese company was one of our clients. They requested that I go in and do agreed upon procedures on the on a company that was going to acquire them, which was a major video game company that is less major now. Let's just put it that way. And we did agreed upon procedures on the video game company, sent a report to Japan, and the minute they got our report, they had a meeting and then decided not to proceed with the merger. So these things can be highly impactful, and it's really about defining the procedures. Then service organizations. These are the ones where you're going to see these a lot in the Valley, more as the customer of them than as the performer of them, unless you're in IT. These are to Type 1, Type 2 are the ones where run the accounting system, all those kinds of things. And as a SaaS provider or as a service provider, but in most cases in the Valley now it's a SaaS provider, to have system change controls, application controls, all those kinds of things, so that the underlying software cannot be changed. And as an auditor, you give assurance to all their customers that these things are not an issue. So there's a bunch of different service organizations. SOC 2 is the one that you're probably going to get from Workday, Oracle, SAP, Gusto, ADP, all these kinds of folks that would be processing things like payroll or your accounting information. And then there's actually trust services. So if you do financial services, less likely here in the Bay Area. There are small regional banks in the Bay Area. There is Silicon Valley Bank, but San Francisco used to be a financial headquarters. It is no longer. So you might do pieces of a Wells Fargo audit, but most of the work is done elsewhere. You're unlikely to see these in the Bay Area, but you should be aware of them for purposes of the CPA exam. And then prospective financial statements, you're probably not going to see these because this is about doing preparation of forecasts and things like that. And again, there's standards around these things, but they're not usually going to ask a CPA to do this. Because they can hire fractional CFOs. That's what I've done for a while. They can hire analysts. There are lots of other people whose core skill it is to build financial models, and that's not usually what an audit firm does. They may want to do it, but that's not usually their core set of skills. So. The prospective financial statements, are, projections. They are subject to standards, and and if you've got to prepare a report, you're required to review the information and evaluate the underlying assumptions and issue a report. Agreed upon procedures that we've talked about. There are specific things that are done, and usually this is around a merger or acquisition. And then there are other audits that could be on another basis of accounting. You could have something on liquidation accounting. You could have something on governmental accounting. You could have something even on a cash basis, right? But it's got to be another comprehensive basis of accounting. You could have an IFRS audit of a division here in the U.S. So, for example, many drug companies are based in Switzerland. If you are doing an audit of a company that is based in in Europe or in the Far East, you may need to issue a report based on IFRS, not US GAAP. And then if you're only auditing specified accounts or elements of the financial statements, or you're doing debt compliance letters, those could be other reports that you would issue. Again, here's some different types of comprehensive basis of accounting, and then other audits or limited engagements. The clients usually have a loan agreement, and they may need some certification from the CPA if they don't have an audit that they're meeting their debt covenants and things like that. And then slide 29 is the report on an income tax basis, and slide 30 is the report on compliance. So that's it.